All right, GM. G fucking M. No intro today for trade of the day. 23rd of August, Friday. I just want to get this shit done. Should be working absolutely perfect. Internet connection is back. So what I need to show, first of all, is I was talking about the build-up of open interest on BTC on daily levels, and I think it fucking froze after I recorded 45 minutes of daily levels for none of it to work. A couple of things I want to look at here. Bitcoin's open interest is building, and it's rising more than price since these lows over here. There's been a build-up, 14%, 2.1 billion, and since that last flush, which actually came after the drop, price is up about 3%. So we have a build-up of OI in a range, or in a consolidation, while price goes sideways. Obviously, price has been sideways since the top here. A couple of ways to look at this. First of all, if you look at previous bullish consolidations that break out over here, you don't see open interest build-ups, right? See open interest flat or sideways, down or flat. And over here, here's an example of open interest where it went down, right? OI declining as price was sideways. This is an example of it flat. Dropped initially, rose back up. Why does that matter? Because that would indicate that below the market is spot demand, and you can see spot support, and that when it breaks out, it's predominantly been a spot-led move to that point, which increases the probabilities of it being a valid continuation. This one here, even as open interest was declining, price was holding up, so spot demand was coming in. You could see this really clearly 4 times. It failed to go lower, and it pushed up. One of the things I want you to notice and think about, it's psychology, right? The more times price, and I can take off this, the way you want to think about it, right? The psychological assumption, let's call it, is that a market that is moving up and keeps trying to go higher is bullish, and that a market that is going lower or failing to go up is bearish. Now, these are just consolidations. These are not trends. Over here, price reached the peak, and then it sold off, and it failed to go higher, and it sold off, and it failed to go higher, and it sold off. And it was not pushing to break out. Same over here. First pump, second push, then it's down, down, down. Holds, compresses, boom, breaks away. Why? Because the market is not viewing this. If you take the average participant, they're not looking at this saying, wow, what a bullish consolidation. Wow, what a bullish consolidation. Now, if you go to where we are right now, especially in the last few days, you've got the opposite. It's going up and up and up. And it's pushing and pushing and pushing and pushing, and it looks good again. So that's obviously not objective, back-tested fucking analysis where you can say this is definitely means we're going to go down. It doesn't mean that at all. I just look at this and think, okay, my expectation is that I know every time price rises, people want to get long. And I know the price keeps rising and sweeping and sweeping and sweeping and sweeping. And if it goes up again, people are going to get long again. And at some point, eventually, that is going to lead to a position where too many longs come in short term and it flushes. Now, maybe it won't. If it's not going to, though, I would like to see, like I said, on daily levels, you probably couldn't see it because of the fucking video, a strong breakthrough with a close. And ideally, an impulse candle. If I put on the old impulse candle indicator over here, and we look at aggregate chart, and we go back and we look at some of these breaks. I mean, here, right? This break, impulse candle, continuation. This one, 2 impulse candles back to back, continuation. And over here, we didn't actually get one. So that was one where you're probably looking at less of a clear signal, and price just kept it grinding. But point being, you want to see price consolidate and then have a strong break to new highs. when you're looking for these breakouts, it should break out and continue. It shouldn't pull back. And when you're seeing these moves through the range and it looks good and you have a big buildup of open interest, my point is just be, I'm proceeding with caution, let's say. I think we can be bullish, sure, but when the market spends all this time here and it looks good, you start to see the threads coming out on Twitter again and people talking again, saying Bitcoin's building, and you see people sharing their fucking charts and they're doing the inverse head and shoulders and the target's up here. And yeah, great. Markets don't tend to move like that though. So we'll see. My expectation is this is consolidation. I don't feel any need to say this is super bullish, this is super bearish. I just think it's consolidation. Now, one of the things that I'm definitely keeping an eye on is this inside day, these build up of compressive days. And especially since we had so that was Wednesday, this was Tuesday. Tuesday had a pump and a reversal. So Tuesday was the last bearish day. Then Wednesday we had a full reversal, Thursday we had consolidation, and here we are on Friday. And you can see open interest picked up in those few days. What I'm looking at here, if we zoom in and we go to the open from Wednesday. We take Wednesday's open, which is here at midnight, to where we are now. Price is up 3.3%. Open interest in the same time from that open is up 5%. Clearly more of a build-up. Clearly a lot of it is long dominated in terms of at least the push. Right? You see a big increase of open interest into this push. You can see a quick leverage flush, but then it resets and rebuilds. So positions are building. Now, of course, open interest, longs and shorts. Open interest is not telling you who is long, who is short. It's telling you the potential, the fuel. So in this inside, meaning we haven't taken out this high or this low in the past 2 going on for 3 days. We have a buildup of open interest, which was, it was 5%, but what was it in dollars? We have about almost $1 billion. It was $1 billion at the peak, about 850 million, 860 million at the moment. That is potential fuel. And so I'd be looking at, obviously since we're near the highs, I'd be looking at if we touch off that 62, what happens from there? Because that's going to be the breakout that people are expecting to see. And I think with this build up, with these inside days, you have fuel here for both sides of the market. I'll take this off because one of the things I want to do is take the inside day and now look at the volume profile and look at where is the volume been distributed since Wednesday's open until now. And here we are. So the volume in this move is distributed towards the highs. Makes sense. We spent most of the time up here, right? We spent half a Wednesday there, and then we moved up and we spent all of Thursday and into Friday up here. We are below, we're inside the value area. So of course, if you're looking at this inside, this compression, and inside days, inside weeks, inside candles, they matter because if price builds and builds and builds without touching off the highs, it can produce the fuel for a strong breakout to either side. Of course, at this point, your expectation is that it's more likely to break out to the upside because that's where price keeps consolidating and it seems like it wants to go higher. What you want to see at that point is the reaction. So how I would be looking at this, if it broke out here and then we reject back inside of this value area, I would expect a fast move to the other side of value. And at that point, potentially, you could see an unwind all the way down. That would be if you get a false breakout. And if you fall back inside the value area, wherever it is, after the breakout, I would see that move down. Alternatively, and this is also true, this whole thing can be a sweep and failure. Meaning, we swept out this high. Tuesday's high got touched off on Wednesday. We came back inside, retested it, failed, retested it again, failed, and retesting again, failed. This could just be a completed, that might be it. Like the whole move might have completed. And the selling might actually already be beginning, and the market might just fail to go higher and roll over. If so, losing that value area low is quite clearly where you see the unwind down to Wednesday's low. So I think trades-wise, if we get a failed breakout, I would short it once it gets back inside the value area. And if we lose the value area low, I would look at shorts from 60.1, 60,000 down to about 58, 57. And from there, if there's a directional move after, I would say, probably if there's a stronger breakdown and you get a correction back inside and it fails, that's where you see the move further down to here. The alternative is that we break out and hold. But if you're looking at this next breakout, what you don't want to see, I'll probably clean this up a bit. I'll take these, in fact, let me just take a lot of this off. Just map these out a little bit more clearly. Right there, red path, you can see the area to short would be in there. In fact, let me just put it in a box. If it comes back inside that value area, I would short. If it loses this level, I would short towards the lows. And the target for both those would be the same. If I was going to go long, what you don't want to see is that it just pushes up above here and sort of hangs around. That's where it makes the false breakout potential greater. What I would like to see personally is a strong breakthrough and hold. Ideally with an impulse candle and some consolidation that fails to go lower, that would equal a continuation. And I think a continuation long from there is the right play. So put that one in green. I don't think it's smart to get long here, because you're trying to anticipate a breakout. If you are a breakout trader, you trade the breakout. That's the point. If you're a trend follower, you wait for a trend to develop and then you buy the retest. And if you have a resistance and a support, right, which is basically what we're in right now, you don't buy resistance and you don't sell support. You buy the breakout, you sell the breakdown. Or if it fails to break out, you short from the high to the low. And if it fails to break lower, you long from the low to the high. These are just standard classic range plays or breakout plays. So what I see now is we're right up at resistance, the place you shouldn't buy, and people are trying to think about buying because it's the usual thing. Oh, looks like it won't pull back, right? So patience is required. Is Friday going to have a big move? I don't know. I mean, crypto has been following. The crypto sell-off yesterday sort of mirrored the stock sell-off, and this is quite a strong reversal on the S&P yesterday. Now, the S&P is absolutely in a buy-the-dip mode. You can see already that from the bottom of yesterday's move, it's already rising up in the pre-market. But, that's an impulse move lower. That's a break of structure. You're rising in the overnight session, which can often reverse when we come into the main session. Let's see how that develops. The crypto correlation to that has been, pretty tight in the last couple of days. Gold, same thing. Gold sold off yesterday, so did crypto. So all of these, it's interesting. BTC sort of followed golden stocks to the downside, but on the upside, it hasn't really been following them because gold has had a really good run over the last several days. Stocks have had a really good run over the last several days, and Bitcoin hasn't. Bitcoin has been kind of sideways, trying to climb its way out of the range. So, as I see it right now, there seems to still be sell pressure present in the market for BTC, and we'll see how that develops. I would look at here. How is if I load this up, let me look at the spot premium and discount. If we're looking across all of this move up, we've had a pretty persistent spot premium, which, while we're in a range, isn't super impactful. We've had pretty persistent spot CVD increase. So spot one is the red one, the futures is the white. So as price pushes up, seems to be spot led to some extent, which is good. We do have, spot markets trading higher than futures markets. We look over here. This is Coinbase 123. This is Binance 113. And then you have the futures markets, which are lower. So you do have spot trading at a premium to futures. Generally, that's a good thing. Generally, that indicates that the futures price being lower than the spot price would indicate more sell pressure or less demand on the futures side. And certainly no problems there. But I talked about this for months when we talk about these spot premiums, and everyone was going on about the spot premium over here, right? Oh, we have this spot premium, that's really bullish. We did move up, right? So the same thing. we did move up. Spot premium, spot premium, spot premium. We're looking at this one. Moved up, back to a perp premium. People start to get long on perps. Open interest increases. We top out. Spot premium returns again. Spot premium, we rally up. Spot premium all the way through here, and then we flush all the way down. Oh, wow. Why does that? This was the one that really had most people surprised. Like, how can there be a spot premium? I've heard that spot above futures is good, and yet we flushed. Because it's not an uptrend. Spot premium is bullish when the market is in an uptrend. That means it's making higher highs and higher lows. We also had a spot premium the entire way through 2023, but we didn't really have an uptrend after April. We had a sideways, down, retest the highs, back down. So it was a range. It was consolidation. It was a sideways market. Take off some of this just to make it clear so we can just see the spot premium. Then the market started to make higher highs and higher lows throughout this part here. All right, it was going higher, higher highs, higher lows. We still had that spot premium. We broke out. Spot premium disappeared. And we moved towards a perp-led but bullish market until we had the ETFs launch back into a spot premium. And this is where we had the most bullish. If you're just looking at the spot premium, this is where it was most bullish. You had ETFs launch, heavy selling on the ETFs. You then had a spot premium return, but you had higher highs and higher lows until we broke out, and we had an uptrending market, which then continued higher. Most importantly, it made a new high, even though the spot premium disappeared, which is fine. Bullish markets will always attract more perp players. Bullish markets will always attract leverage. Funding will always rise. That's fine. That's a sign that people want to take on risk. It's when it gets too extreme that it's a negative. Like we went to an extreme perp premium towards the highs, and obviously then that led to the top. But most importantly, it broke out. It broke structure here, bullishly. So for BTC, if we see it move up and break structure above 70, that's our first major shift. Why? Because Bitcoin has been making lower highs all the way. The next time it doesn't do that, the next time it invalidates that and makes a higher high, that's a sign that we could have a shift on our hands to go higher. And the thing I see really is just people are like, okay, yeah, that's great, but that's 72. I don't want to buy at 71 or 72. I want to buy at 61. It's like, okay, well, the same thing has been said all the times here. And are you going to just keep trying to pick bottoms, or are you going to actually wait for confirmation? I think it's better to wait for confirmation. If your assumption is that Bitcoin goes significantly higher, then why is there a need to guess? Right? Imagine you just avoided all of this and you traded the valid high volume breakout. You weren't late. Right? After the sell-off, you waited and you bought here. Great. Same thing here. Why trade it within the range? And the last thing about these spot premiums and spot discounts is you have a spot premium the entire way through the bear market. Right? A downtrend will also be accompanied by a spot premium. Why? Futures selling is always heavier because there's liquidations happening and there's shorting happening. But if it's in a downtrend, futures can be right and spot can be wrong if you're talking about premium or discount for a long time. So given that we can see clearly here that a spot premium is a feature of a bear market, okay? When does the spot premium start to disappear? At the start of the bull market. We start to see perps premium come back. So this idea that only a spot premium can be good and you have to have a spot premium, the data does not bear that out. Spot premiums are a feature of a bear market as well. It's when you have a spot premium still and the market's rising, that's like really bullish. But this is not a rising market. This is currently a falling market / sideways market. The fact we have a spot premium indicates that there's no risk. People don't want to come in and take on risk and add leverage and add futures trades, which you need. You need those things to go higher. Again, when it gets too high, too extreme, that's when you can look at reversals. But when you see negative funding or spot premiums, again, they are features of bear markets. We'll go and talk about funding here for a second, because this is another one. People are like, oh, like funding rate is going to flip negative and positive, and every time it goes negative, people are like, oh, short squeeze coming. It doesn't work like that. Again, 2022, we had negative funding all the way, right? It was flicking back and forth between positive and negative the whole way down. Then we got the deepest negative at the bottom. Then as we start to rise, You start to see more positive funding coming in, little bits of negative throughout the year, then big positive funding, which took us into the highs. And now we're back to just this neutral balanced market. And every time it touches into negative for these little tiny parts here, it doesn't mean bottom's in, let's go. It's a massive misinterpretation of data and overreaction. So, I don't even know what you heard or seen on daily levels, but at 2 p.m. UTC, Powell is speaking, press conference. I'm going to go live for that. That will be earlier than the usual. We usually stream at 4 for Casual Fridays. But I'll go at 2. We'll watch Powell. Then we'll also do Casual Fridays. So we'll do a mega stream today, a double stream, a 2-hour stream. See you then. G fucking M. And did I lay the trades out? Trade of the day? I did, yeah. Trying to make sure I actually did what trade of the day is supposed to be. So just to finish off. Where was it? Not there, no. Where's the... Didn't I draw out those trades? No. Which fucking chart was it on? Anyway. Was it on this one? Or did I wipe it? Maybe I wiped it. Anyway. I laid them out. The short trade, the long trade, and looking at the value area and the volume profile. Was it over here? No. Where the fuck was it? There it is. Okay, perfect. Failed breakout offers a short. Strong, confirmed breakout, ideally with an impulse candle, confirms a continuation long. Losing the value area low would equal a short, probably to 58, but also there's a good chance that it could go lower and we might see that move down further below. GM, GM, GM.